Hey guys, I'm Tim Kotzman here with Dan Hillery. Dan, what is MicroStrategy's new key performance metric, which they call Bitcoin yield, and how is it achieved?
Sure, yeah. There's a lot of confusion on the internet regarding MicroStrategy's Bitcoin yield. And this is not Celsius or BlockFi. This is not them lending out their Bitcoin. There's no lending going on right now. And I know Michael Saylor has in the past talked about potentially lending out their Bitcoin, which may happen in the future someday. But right now, this Bitcoin per share yield is derived from inefficiencies or exploits in the traditional capital markets. So as you know, MicroStrategy trades at a premium to their underlying holdings. We talked about that in a previous video that's called multiple to net asset value. And what that allows MicroStrategy to do is to sell shares into the open market using at-the-money offerings and purchase Bitcoin. And if MicroStrategy was trading at a 1x premium, then they would be able to sell shares and buy Bitcoin, and there would just be more outstanding shares and more Bitcoin on the balance sheet. But you as a shareholder would not have accrued any more Bitcoin per each of your shares. What this premium allows us to do, or allows MicroStrategy to do, is to increase the number of Bitcoins each shareholder has, thus Bitcoin yield. The way that works is, let's say MicroStrategy is trading at 2x their underlying Bitcoin holdings. If they sell 5% of their shares, they increase their outstanding shares by 5% by selling them into the open market. They're actually able to increase their Bitcoin holdings by 10%, right? That's the effect of the 2x premium. What this does is it increases the number of Bitcoins per share, or the ratio of Bitcoin per share, by 5%. And then if you were to do the same calculations over a 3x net asset value multiple, a 5% increase in outstanding shares would increase the Bitcoin per share by roughly 10% if all of that capital is used to buy Bitcoin. So this is one of the ways in which they can increase their Bitcoin per share. Now, another way in which they can increase their Bitcoin per share is just simply by buying more Bitcoin, right? They have cash flows, they're an operating company. They can use their cash flows and buy Bitcoin. This is not highly effective because they have so many Bitcoin on their balance sheet right now. Their actual cash flows are very small relative to their holdings. So this isn't a great way to do that. But that leads to the next point, which are the convertible notes. And they can offer convertible debt and use the income generated by this convertible debt to buy more Bitcoin. And they pay the interest on the debt using their cash flows. So this is a way for them to leverage their cash flows and increase their Bitcoin holdings. And the way this works is convertible notes are much like increasing the Bitcoin per share using at-the-money selling. So when they go and offer a convertible note, the conversion price is about 30% above the current market value of MicroStrategy's Class A shares. And these Class A shares, or their market capitalization, is already trading at a premium to their underlying Bitcoin holdings. So it's effectively a premium on a premium that they can use to purchase Bitcoin and then cover the interest payments using their cash flow from their operating business. So it's an even more accretive way to add Bitcoin to their balance sheet. And you may say, okay, but what about dilution when those bonds come up for conversion? And again, the premium on the premium is the way in which accretion occurs. That premium, as long as there's a premium over MicroStrategy's underlying Bitcoin holdings, they're able to accrue Bitcoin for their shareholders, which is something that we all want, and the reason why we continue to put a premium on those Bitcoin holdings.